Hey, this is your real estate professor, Tiana here with Hillman Talk University. So today we're going to go over different ways that real estate investors make money in real estate. Number one is through cash flow. Cash flow is basically when you take all of the expenses of a property versus all of your income, and you're going to actually calculate every single expense for the property. That includes your mortgage. Your mortgage is a combination of your principal and your interest, the property taxes, the insurance on the property, any of the utilities that you pay on the property, and then also what we have is a savings for the property for future repairs. We're going to take all those expenses and then we're going to look at the income that's coming in. The income that's coming in is typically in the form of rent, and so we subtract the income minus expenses, and that's what tells you your cash flow in the property. So that's one of the ways that realtors make money in a property. Say they have a property that costs $2,500 a month to maintain. They're able to rent that property out for $2,800 a month. That means their cash flow is $300 a month. So their goal, if they want to have $3,000 a month in cash flow, then they would need $300 a month times 10 in order to get that cash flow. Another way to make money in real estate is through appreciation. So as the years pass on, the value of the properties typically grow. On average in the United States, properties tend to appreciate in value anywhere from 3 to 5%, but it can be as high as 9% or even higher than that, depending on what market you're in. So as the values of these property go, your property begins to appreciate. So the house that you bought for $300,000 one year may be worth $350,000 in a couple of years, or in 10 years, or in 15 years. So you're able to hold on to that equity to either sell that house later, or you can refinance that house to pull that equity back out and then use that additional money, that equity, that wealth that you build for something else. Another way to make money in real estate is all of the tax deductions that you can have. So think about it like this. When you own a home, as a regular homeowner, there's not a lot that you can deduct. But when you turn that home into a business, you can now deduct a lot of things. I specialize in furnished rentals. As a result, that means I can write off the purchase of toilet paper, the purchase of TVs, the purchase of any type of home beds, basically all the furnishing, because these are things that you need in a furnished rental. So all these daily purchases that people normally get, I can actually write that off against my income. I also get this very, very beautiful thing called depreciation, where we take the value of the property itself, divide it by 27.5 years, and I can deduct that amount from my personal income in order to allow me to pay less taxes. So this is just a couple of ways you can make money in real estate.